morning, and welcome to On the Money right here on WDBO, AM 580, always streaming inside your WDBO app. My name is Josh McCarthy, joined today with two wonderfully certified financial planners with the Certified Financial Group, here to answer your questions live on the air, as they do every single Saturday at this time. Joe Bert and Harry Stadelmayer with the Certified Financial Group, here being our representatives, our guides to and through retirement, as they have done on WDBO for over 30 years. Gentlemen, how are we doing this day?
We're doing great, Josh.
Hi, Josh.
Good to be with you, man. And as you said in the intro, or I said in the intro, or somebody said in the intro, we are here to take questions that our listeners might have regarding your personal finances, things that might be on your mind, regarding your IRA, a 401k, long-term health care, reverse mortgages, life insurance, annuities, real estate, all that stuff that Harry and I and the 15 other certified financial planners work with our clients Monday through Friday as fiduciaries, providing retirement planning and investment advice for a fee. But on Saturday morning, as we like to say, we are here for you absolutely free. So if any of those questions on your mind, any things that might be bugging you, anything you might have heard, anything is a little disconcerting, that's why we are here to kind of calm the nerves, if you will. So the good news for you is, well, we're going to have a caller up, I see, but there are other lines that are wide open. So, Josh, give our listeners those numbers.
If you want to join the conversation, maybe you listened to the news or heard a friend talk or eavesdropped successfully and something popped into your brain, you stored that away. I gotta ask Joe and the team at Certified Financial Group on Saturday morning. Then pick up the phone right now, dial 844-580-9326, 844-580-WDBO, or send in your open mic using the free WDBO app. What do you say, Joe? What do you say we go right to the phones and talk to David, who's calling in from Dr. Phillips? Go ahead, David.
Good morning, David. How are you? Appreciate you calling.
I'm doing. Thank you, guys, and I appreciate you. Hopefully, can give me some right direction. So I'm an independent employee. I'm a 1099 insurance guy, and for years I've been told that it's, max out your Roth, but I've got a SEP also, and I understand you should or could or can contribute more to your SEP for tax purposes. So I'm making a lot more money this year compared to what I have the last several years, and I just don't want to get in tax problems.
I got you. Well, that's why you want to use a deductible plan. Your SEP is probably the way to go. Have you looked at, you're an independent contractor, so you're a single guy, obviously no employees, right?
Correct.
Have you looked at a UniK, a one-man 401k?
No, have not.
Okay.
I mean, I just put my son on my payroll. He's 18. I did that this year.
Okay. All right.
But that's a very, very minimal. He's, no big deal.
Gotcha. There's no question that you ought to use your SEP because that's going to be deductible for you. We have a philosophy here that you want to take the tax deduction, particularly if you're in a tax bracket that's over the to 20% or threshold or so, because you're getting that tax deduction now as opposed to a promise of tax-free income in the future. So your thinking is right.
And the amounts are substantially larger. I
Right.
mean, you can get very creative with the SEP. Depending on your income versus the Roth, I believe is what,
8,000.
8,000. So,
yeah. 8,000 if you're over 50.
Right, over 50. That's with the catch-up. So with the SEP, you can put a few more zeros after that.
Yep.
So definitely more benefit to you, David.
Yeah, there's no question about that.
It's hard to tell what my final 1099s are going to add up to this year. But that's what I've been trying to do, is just put more money into my SEP because I maxed out my Roth earlier this year, the 8,000. And because you can overfund your Roth, but can you overfund your SEP?
Yes, there's a penalty. There's a penalty if you do.
Right.
Yeah.
Well,
You can
what
do.
I mean is,
you can do it, but you don't want to do it.
Who prepares your taxes,
Correct.
David? Do you do your taxes yourself?
No.
Okay.
No. I've got an accountant. He's in Houston, Texas, and I'm 60 years old. No, I didn't mean you're supposed to overfund your SEP. I mean your Roth. You don't want to do that, but you don't want to put more than 8,000 in. But I don't know what the threshold is on the SEP. It's like some form of 25% of whatever your.
It's 25% of the employee's compensation, but it really gets down to 20% because you have to subtract some of your FICA taxes. So, but the limits are up to about $69,000 for 2024.
Okay.
For your SEP.
I want to come in and just talk to you guys because it's y'all's language versus my language. And, if they can set an appointment sometime this week and kind of show you what my goals are,
Sure.
then figure out a game plan, maybe.
Sure. Well, David, that's what Harry and I do, right, Harry?
Yeah, we do that all day, every day, David. And it's calls like this and callers like you. That's why we do this show, is to reach out and say, listen, this is what we do each and every day. And, if we can help you boost your savings, retirement, by just simply some different strategies that you may or may not have thought about, that's the goal of why Joe and I have been doing this show for 30-some years. So, yeah, we would love to have you come in. There's no obligation, and we'll have a cup of coffee and sit down, and we ask some questions and come up with a game plan.
That sounds like a good idea. Okay, well, great. I'll continue listening, and then we'll make an appointment, and we'll figure out something this week.
Yeah, give Harry a call this week, and we look forward to seeing you in the office.
We'll
and appreciate the call.
Thank you, guys. Appreciate
You're
it.
quite
Bye-bye.
welcome.
David.
Yep. So our topic of the day, Harry, is what?
Well, we're going to start out. Listen, I don't want this to be politics, but we are going to talk about the election just briefly. The phone's been ringing about, and I've received emails, Joe, you probably have as well, about, if he wins or she wins, I want out of the market. Folks, listen.
Before you begin, this is for the benefit, not only for our listeners, but I have not had a chance to reply to this because I've been in and out of the office, to my longstanding friend, Big Al Taylor up in Atlanta, who I think has this on his mind. So, Al, if you're listening, this is dedicated to you. So go ahead, Eric.
The idea, actually, there was a very interesting interview this week with Dave Ramsey, and former President Trump sat down with Dave Ramsey. To be clear, Kamala was also invited, but has not accepted the invitation. But Dave Ramsey said, listen, I don't want to talk politics, but what I do want to talk about is the things that happen in my listeners' home is far more important than what happens in the White House.
I like that.
And
say that again.
So what happens in my listener's home, in your home, is far more important than what happens in the White House.
What happens in my house is more important than happens in the White House.
White House.
Got it.
And that theme is, $8 eggs and $5 gas and 7% interest. And how are we going to reduce those large expenses? How are we going to get interest rates down? And what would you do? And that just, the problem is we turn on the television and we see all this rhetoric that I'm going to do this and I'm going to do that, and we're putting too much emphasis on the White House. We have a trillions of dollar budget. One person is not going to necessarily change, the way that the markets react. The markets are very, very bipartisan, if you will, unless you have all blue or all red.
Right.
And so what I found is very interesting. There have been 24 elections since the S&P began. 20 of the 24 years, 83%, the markets were positive.
83% after the election, regardless of who won, the markets are positive.
When a Democrat was in office and a Democrat was elected or reelected, the average return was 15%.
Okay.
Kind of on track.
Got it?
Right. When a Democrat was in office and a Republican was elected, the total return was averaging 13%.
So when a Democrat was, like right now, so if Trump is elected, historically.
Yes.
Okay. Got it.
And then when we can look at years after, my point is elections come and elections go. And again, I'm not here blue-red. What I'm saying is that if you let the tail wag the dog, you're going to miss out because of maybe internal feelings, gut reactions.
It's emotion.
It's a total emotion. And I have something that was put out by the Capital Group, American Funds, and it basically says elections come and go, and results last a lifetime. And for any of our listeners that are interested, and I have some of these left, I show this to every single client in election years. I've been doing this now almost 40 years. And I hand this out to clients when they come in, and they're very concerned about the election. And, well, it's different this time. Listen, I'm not saying everything's rosy and peachy out there, but having looked at this program, I'd be willing to send this. If you want to send me an email at harry@financialgroup.com, I'd be happy to include your address. I'd be happy to send you this brochure. It basically talks about every single president since Franklin Roosevelt in 1936, the challenges that he had in the economy. There is not one bit of good news on this chart. We're talking about oil embargoes. We're talking about Nixon. There is nothing good on this sheet, and yet the market continues to go up. This is based on basically the S&P 500. So basically what we're looking at is giving you maybe a little peace of mind that, this election is turbulent. It's mudslinging. It's ugly. But
which one in my lifetime hasn't been, though, really?
So if you are interested, I have probably 2 or 3 dozen of these left. Election is 30 days away. I'd be happy. It's a great piece to give you a little bit of peace of mind that turbulent times can also produce some great returns.
And it puts things in perspective, which is the key.
100%.
Yeah.
And again, what it allows you not to do is try to time the market. That, I'm getting out right before the election, which we've all seen, or I'm getting back in, or I don't like this candidate, or I'm out, I'm going to cash. So anyway, harry@financialgroup.com. Send me your address. I'd be happy to put this in the mail, free of charge. I'm not no other interest here than give you some peace of mind.
So what's the number one takeaway there, Harry?
The number one takeaway is do not let your emotions take over.
Yep.
Investing should not be emotionally driven.
Yep.
Because if it is, we'd be in and out weekly, and that's not the way to make money.
No, for sure. It's not timing the market. It's time in the market with diversification and quality. If you're diversified with quality in the long run, it always wins. Never the smooth line, never a straight up line. As I like to say, if dieting and investing was easy, we'd all be skinny and rich. But it takes discipline, it takes patience, and it takes it takes somebody to keep you from making those moves. As I like to say, we are more behavioral counselors as we are investment counselors.
There are times that I feel more like Dr. Phil than
Phil,
Harry.
I hear you.
than Harry, the financial planner.
That's part of the job.
That's it, exactly.
I hear the bumper music, Josh, so take it away.
If you want to join the conversation, Harry and Joe Bert, certified financial planners with the Certified Financial Group, standing by to answer your questions. 844-580-9326 is the number to call. 844-580-WDBO, or feel free to send in your question using that open mic inside the free WDBO app. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the 3rd or 4th generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today. You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the 3rd or 4th generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it. Like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, where we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, where we're planning tomorrow, today.
As an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So it's On the Money here on WDBO AM 580, always streaming live inside your WDBO app. Josh McCarthy sitting here with Harry Stadelmayer and Joe Bert with the Certified Financial Group. If you want to join the conversation, if you heard something in the news, if you're approaching those golden years and you want to make sure you are properly prepared and you don't get out too early but you don't stay too late, that's what these experts do, the Certified Financial Planners with the Certified Financial Group. Call 844-580-9326, 844-580-WDBO, or you can send in your question using our open mic inside the WDBO app. But if you happen to be around the Longwood area on some of these, some Wednesdays, some Saturdays, all kinds of days that Joe can get into, there's a great resource they have at the offices of Certified Financial Group. Isn't that right?
Yeah, that is exactly right. I'm sorry, Joe.
No, go ahead.
I was gonna give Joe kudos because when we redesigned this facility, that used to be a Bill Knapp's, for those of you that go
which was
way back,
which was a restaurant.
which was a restaurant, Bill Knapp's restaurant.
Right.
When we purchased and then recently redesigned, one of the priorities was to have what we call the Learning Center. We have a very, very state-of-the-art learning center. And the purpose of that was to provide workshops and to provide our listeners and just the general public, Seminole and Orange County, the ability to come in and maybe learn a thing or two. and that they have been very successful. So we do have some workshops coming up, a couple more left before the end of the year. The next one is October 12th, which I believe is next Saturday. And this will be Savvy Planning for Boomers, strategies to help you save taxes and get more out of your IRA. I'm sorry.
That's right.
And that will be next Saturday from 10 to 11:30, and that will be hosted by Dave. And he will dig deep into basically different strategies and some tax planning. And that is next Saturday. And you can go to our website and register for that on the website. By the way, these are free. There is no cost. We don't lock the door and have you purchase anything. That's not what we're about.
And we're not going to try to sell you an annuity. Once again, that's next Saturday from 10 to 11:30. And it's going to cover the Secure Act 2.0 of how the rules have changed, how some people can't stretch their IRA anymore. And are you grandfathered? Are you not? The things you need to look at. So that will be, once again, absolutely free next Saturday at our workshop. And as Harry said, if you want more information about that, go to our website. That's financialgroup.com. Financialgroup.com. Click on events, and you can make your reservation right there.
And we do have one more that I'm going to talk about, and that is November 9th. And that is the new retirement rules. That's also the Secure Act that was passed in December of 2022, and that is Matt Murphy, the new retirement rules.
And that's going to be
Saturday.
We'll be here. That's going to be at my new home at Village on the Green.
It's at Village on the Green.
At Village on the Green.
Correct.
In fact, it just gives you an opportunity to be part of the live studio audience. We're going to do the program from 9 to 10 at Village on the Green, so you can come on by and see us, see the monkeys here do the show. And then from 10 to 11:30, we will do the workshop, and then you can stay for lunch on me. So if you'd like more information about that, you can go to our website, once again, financialgroup.com, financialgroup.com. And I saw we have a text question floated in. We probably can't get to it, but let's tease it here before the break, Josh.
Absolutely. Yeah, Don from College Parks has a really interesting question about, he's got several large CDs maturing in the next 30 days, and he's realizing that the renewal rates are substantially lower. Do you guys have any suggestions for an alternate solution for his safe money?
I think we can come up with something.
I think we can. I think there are a lot of people scrambling as CDs mature, and we will certainly give you an answer and some solutions and suggestions right after we come back from the break.
Absolutely. Stay tuned to hear Don's answer, or the Joe and Harry's answer to Don's question. If you had a question of your own, pick up the phone, dial 844-580-9326, 844-580-WDBO. Send in your open mic using the free WDBO app today. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
You guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, "Hey, Lou, I'm barbecuing this weekend, right? What do you like?" And Lou goes to, the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my labs, she's going to take all the measurements, she's going to run all of her analysis, and she's going to absolutely give me her best thinking on what's best for me. Whether she's a vegetarian or a meat lover, likes this, likes that, if she thinks I should be doing something differently, even if it's not good for her, she's going to give me an opinion that's for my interest. So what's the difference between a fiduciary and the brokers? Well, these are dietitians, these are butchers. It's that simple. Brokers are butchers selling product. Fiduciaries are dietitians looking after your health. The problem is most people think that their butcher is a dietitian. So when one of your moms or dads or friends calls the broker and says, you know, I got 200 grand, I sold a little piece of property, or I got some inheritance, what should I do with it? They're going in thinking they're talking to a dietitian, and they're really talking to Lou the butcher.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. For more than 40 years, our certified financial planner professionals, acting as fiduciaries, have been providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Our fiduciary approach of providing retirement planning and investment management for a fee seems to resonate with our clients. But don't take my word for it.
I knew a gentleman that I worked with who had come to Certified Financial Group.
A friend of mine recommended them, and they were totally correct how good they are.
I had heard from somebody else that it was the best one in town.
I've sent several of my teacher friends here.
We're Certified Financial Group, but we're planning tomorrow, today.
Back to On the Money here on WDBO AM 580, always streaming live inside your WDBO app. My name is Josh McCarthy, sitting here with Joe Bert and Harry Stadelmayer with the Certified Financial Group. This is your chance every Saturday at 9 a.m. to pick up the phone and talk to the experts with the Certified Financial Group, as they have been on the air here for over 30 years, providing WDBO audience with valuable information on how to get to and through retirement with the most confidence that you can. Pick up the phone right now, dial 844-580-9326, 844-580-WDBO, or send in your open mic using that free WDBO app. Now that you have that number in your head, I want to put another phone number in your head. And this is the most important number for the other 23 hours of today and the other 7 days of the week. I can't count, that's so high. But there's the number of the offices for Certified Financial Group. That's where Charles Curry is standing by right now to take your calls off the air. That number is 407-869-9800. If you prefer to have your question off the air, or if the information you want to provide is a little more sensitive than you want to give out on the air, that's a great resource. Charles Curry sitting in the office right next to Joe and Harry today, but off the air, that number is 407-869-9800. What do you say, Joe, Harry? What do you say we go back to Don's text question?
Yeah, let's tee it up again.
Sure. I'll reiterate. Don asks before the break. He said, I have several large CDs maturing in the next 30 days, and I'm realizing that the renewal rates are substantially lower. Any suggestions for an alternative solution for my safe money?
I think that is the big question right now as we're watching the Feds. By the way, the numbers were kind of hot Friday, weren't they?
Yeah, big employment numbers.
Employment numbers. So
a lot of people are wondering if they've been juiced, but we'll
exactly. And now there's a question: will they lower?
Right, as they have for the last 17 out of 18. But that's right.
The big question, or we all know that the Feds are lowering rates, and when interest rates move up, typically bonds go down.
Mm-hmm.
Okay, that's simple math 101. Interest rates up, bonds go down. So in the last few years, if you had a bond portfolio, you probably didn't do very well. You were probably a little disgusted in watching some of the bond funds and bonds not do well. So the converse is also true. So if the Feds are in fact lowering rates, we are starting to look at more bond funds for some of the safe money. And people say, well, bonds aren't safe. Well, they're at least going to yield a little bit for you, as well as have potentially some appreciation as the Feds continue to lower rates. Because I promise you that in the next 24 months, the goal is to see the Feds get rates back to ideally 2% or 3%.
Mm-hmm.
And so all those CDs that you folks have been enjoying at 5.5, 5.7, as they come due, you may be lucky to get 4.5 if you renew for another year. But that next renewal, you could see rates back into the 2 or 3%. So we have an investment committee here, and these folks are in charge. It's a compilation of our peers, if you will, and they're scouring, looking for the best quality bond funds, short-term, intermediate, and long-term. And so when my clients say, well, I have a CD maturing, and I find out if they're really adamant about renewing that CD, I might suggest looking at some bond funds, not maybe individual bonds, but also some bond funds, because we do feel very confident that the rates are coming down, and when rates come down, bonds will appreciate in value. Right. So that, Joe, I don't know if you have any other thoughts on safe money, if you will.
No, you got to remember the purpose of bonds. There's really two purposes. One is perhaps to give you income. You get immediate income from it. And if you're looking for income, don't get focused on what the value of the bond is, because just generally the income will be there. I like to use, you've heard me say this 100 times, our listeners have too, but the bond is the chicken that gives off the eggs. The eggs will be there. Don't focus on the size of the chicken. If interest rates go up, the chicken's going to be smaller. If interest rates go down, the chicken's going to get fatter. But the income will be pretty consistent. That's number one, is income. Number two, it's the ballast. It's the safety net, if you will, in our clients' portfolios, particularly those that have the moderate to conservative portfolios, that when the stock market goes to hell in a handbasket, the bonds are there to protect you on the downside. Now, if you have an all-stock portfolio, you're going to do very, very well. As in the last year, our clients have done that. For those that are aggressive, most of our clients, 80% of them, I would say, are moderate investors. They want to get above average returns, but they don't want to take great risks, and therefore you're going to have bonds in your portfolio. In 2022, bonds took a little bit of a beating.
Sure.
I mean, in fact, it was an unusual year where the stock market and the bond market were just awful. I mean, that never happened in my many years of doing this. But bonds are designed to provide you either income or the ballast in your portfolio. So when the stock market goes down, you've got some protection on the downside. And as you said, interest rates go up, the value of bonds go down, and vice versa. And it's a strategy that we use, and it's also an opportunity to rebalance. When your stock portfolio gets a little hot, as you should sell off some of those gains and put them in the bonds, and then vice versa. When the bond value goes up, you sell those and put them in the equity. So that's what managing money is all about. We're We're not passive about it. We are actively managing our clients' portfolios, but by actively managing, I'm not saying we jump in and jump out of the market. Anybody that says they can do that consistently, I want to meet that person, and I will personally give my money to that person, because nobody can do it consistently, although a lot of people sell that hocus pocus, and we see it all the time.
Yeah, absolutely.
So that hopefully that answers Don's question. I saw another text question float in there. Josh, what do you got?
You got it. If you want to call in, 844-580-9326. We got a long question from Ryan. Ryan says, I have $2.5 million, and I fear that I'll never be able to retire. Am I being irrational? Intellectually, I'm feeling well prepared for retirement, but in my heart, I have an irrational fear that I'm just not ready. I think my fears center around the uncertainty of the market and not having an income stream. Currently 57, and my wife is 60, looking to retire in 3 years. How should we draw down our retirement funds, especially while we wait for Social Security? Our annual expenses are approximately $70,000. Any advice is appreciated.
This sounds like all of our clients.
Yeah.
Here's all my numbers. Now, what do I do?
Yeah. And this is not a topic that can be handled in depth on air. But I happen to have information on this texter. And this is a typical planning client. This is someone that has sat down and maybe on the back of a yellow pad has said, okay, well, I have X amount of dollars, I have $70,000 of debt, and I have, X, Y, Z. There's a lot of moving parts in this text question, if you will. I happen to look at the portfolio that was sent in to me, and there's probably 10 or 12 different buckets. Some are taxable, some are Roths, some are brokerage accounts, some are IRAs. And I think the big question is, when that paycheck stops, what buckets do you start withdrawing from?
Right.
That is I believe one of our workshops is going to discuss that. I'm not sure if it's Matt or Dave's. We'll be discussing the proper and accurate way of pulling monies from these different buckets. But things that this person is going to have challenges with, if they're retiring at 60, theoretically they have 30 years of life expectancy.
And the number one challenge is health insurance.
And that was the big one. At 60, you're retired, unless you have a super duper plan that follows you through retirement, which is very rare. That health expense can be a deal breaker. I mean, we're looking at maybe and potentially several $1,000s a month of healthcare costs involved here. So this is a typical planning client. This is an individual that really needs to have some planning done, and that's what we do. It's not a yellow pad. It's not a real easy, simple process of. We go through the detail of inflation and assumed rate of return and challenges. Maybe there might be a wedding involved or new cars, or maybe I want to take that world cruise. Those are all expenses that are going, because when you look at it on the surface, I had somebody walk in with a plan that had no taxes withdrawn, that had a 12% assumed rate of return, and there was no inflation. They're going to make it on paper.
Yeah.
But in real life, boy, wouldn't it be a shame to get down the road and realize that you're running out of money before you run out of breath?
Yeah, we've all seen clients walk in from these plans that have been offered for free, and unfortunately the assumptions are not realistic. And it works until it doesn't work. And unless you know the assumptions that have been put into that plan, it's really a crime, because what you've done is you've suggested to the folks that, okay, you're on the great path, just give me your money and we'll manage it for you and don't worry about a thing, and we're going to do this for you absolutely free and sign me up here, only to find out that the assumptions that were used in the plan are totally
bogus.
Well, they're just not real. And of course, you can put in any numbers and make anything do any kind of thing you want it to do, but it just doesn't work. As I like to say here at the Certified Financial Group, there are no gimmicks, there are no freebies, just good advice for a fair price.
Yeah, absolutely. The idea here is that also when a plan is provided here at CFG, as long as you stay with updating that plan, it's kind of the roadmap. Listen, if I'm If I'm headed to Seattle, Washington, and I run into a roadblock, GPS is going to take me around that roadblock and ultimately get me there. And that's kind of like financial planning. You're going to run into roadblocks.
For sure.
We're going to run into bad years. We're going to run into 07s, 8s, and 9s, where we saw the market just really struggle for years. But once that plan's in place, as long as you have the plan available and you adjust the plan for those roadblocks, we'll get you back on track, on the straight and narrow. And that is the peace of mind that planning can provide you versus I just want to buy Google, Amazon, and be done with it.
Mm-hmm.
That is not a plan.
No.
And if you fail to plan, you plan to fail, as
Yeah.
we always said.
Yeah, as you said, that's what financial planning is all about. Is certified financial planners. That's what we've been trained to do. Is look at where you are, where you want to go, and what do you have to work with to get there, and how can we make it work? And we will tell you if it's not going to work. I mean, I've had some of those difficult cases that you have, Harry, where folks come in all optimistic, we're ready to go, ready to pull the trigger, going to retire next week, and only to show them that if you do that, there's a high probability you're going to run out of money when you're 85 years old. And unless you've really done the calculation, done the analysis with reasonable assumptions, you may be heading off on that long journey to Seattle, only to find out by the time you get to Washington, you've run out of gas.
Yeah.
So
And that's a classic example of when couples come in and you do show them the funds potentially running out at age 80 or 85. Yeah. Do you know the wake-up call that I've seen in couples say, maybe we need to spend a little less. Maybe we need to tighten up our budget.
Or the difference working another year or two.
Correct.
Will make
huge
difference.
Huge difference.
Because chances are you're in your prime earning years and you're not tapping into your money early, and that makes a huge difference on the back end. But unless you have an idea what that back end looks like, you're really flying by the seat of your pants. So that's what we do with certified financial planners, and that's what service we've been providing to our clients now. Excuse me, for nearly 50 years. And we're glad to help you. Go to our website, financialgroup.com. That's financialgroup.com. And once again, if you just want to get a flavor as to what we do, come to our workshop next Saturday from 10 to 11:30 on IRA withdrawals and what you need to know after the Secure Act 2.0. And I hear the bumper music. Josh, take it away.
You want to join the conversation? 844-580-9326. Also, Charles Curry standing by to answer your questions off the air, if that is your preference, in the Office of Certified Financial Group. That phone number is 407-869-9800. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
You may be new to the area, but we're not. For more than 40 years, our certified financial planner professionals, acting as fiduciaries and providing retirement planning and asset management for a fee to countless families across Central Florida.
We've been with Certified since 1992.
We're now into the third or fourth generation of clients that have come to CFG and the team here to do a great job.
It's been so long since I've been doing this that I just don't even worry about anything anymore.
We're Certified Financial Group, but we're planning tomorrow, today. Black Monday, the dot-com bust, 9/11, and now 2 wars. We've pretty much seen it all. Acting as fiduciaries, our CFP professionals have been a steady hand guiding our clients to and through their retirement years.
No reason to be worried about anything.
Stay the course. You stay the course, and you get there.
I don't have to worry about it like I know a lot of people look at it every day. I don't have to do that with the team here at Certified Financial Group.
We're Certified Financial Group, but we're planning tomorrow, today. Are you tired of trying to reach your advisor through a call center and being put on hold for 20 minutes? That's why we don't use one, and our clients seem to appreciate the personal touch.
They always answer my questions and really care about what's going on with me.
You can trust what they say, and they do what they say, and it gives you a comfort feeling it's hard to find in the world today.
Waiting for you to call almost. You almost feel like that.
We're Certified Financial Group, but we're planning tomorrow, today.
As an an investor, you want peace of mind. You need to know that your advisor is not only thoroughly competent, but also a fiduciary. In other words, he or she is acting at all times in your best interests. You need to trust your advisor, regardless of how much money you have to invest or what part of the world you're in. It might not be your money you're entrusting the advisor with. Perhaps you're a board member of a charity or foundation whose future depends on prudent investment. Or perhaps you have the responsibility of making investment decisions on behalf of other people. As the trustee of a retirement plan, the decisions you make can have a direct impact on the lives of your employees. Whatever type of investor you are, the solution is to use an advisor certified by the Center for Fiduciary Excellence. A CFEX certified advisory firm demonstrates its adherence to a global fiduciary standard of excellence, a defined standard with specific criteria covering 21 best practices. The documented, repeatable processes and the evidence-based decision-making that CFEX demands are more likely to generate investment portfolios that match client needs and expectations. And because the firm voluntarily agrees to a rigorous annual audit, investors can rest assured that their advisor continues to work to the highest professional standards. This independent verification is even more critical for trustees and investment committee members of retirement plans who are legally required to conduct regular due diligence on their service providers. Use a CFEX certified firm, and that job has been done already by an expert at no expense to the plan. So why leave anything to chance? Insist on working with investment professionals you can truly trust. Insist on using a CFEX certified advisor.
So you guys don't know Chicago, but I'm sure in your neighborhood you guys have an old school butcher where you walk in and there's a bunch of guys, no gloves, big white aprons, and there's Frank and there's Stevie and there's Mikey. And these guys know more about meat and more about animals and more about cooking the meat than any of us will ever learn. And so you walk in and you say, hey, Lou, I'm barbecuing this weekend, right? What do you like? And Lou goes to the big racks of stuff he has underneath the glass, and he goes, the veal chops, just in from Argentina, they are the bomb. And you go, veal? Oh, I like veal. Well, what do you got on skirt steak? Oh, we got some great skirt steak. Just came in yesterday from Montana. Skirt steak is one of my favorite, marinated up a little bit. It's fantastic. Lou will never say to you, Elliot, it's a little long on the meat here, big guy. Your cholesterol is getting high. Why don't you go down to the fishmonger a couple blocks and have a nice piece of salmon? Right? He'll never do that. Why? His job is to sell me meat, and I go in, actually the same way I go into the Toyota dealership, because I like Toyotas, and I trust the salesman to sell me a good product if I trust him. And the fact that he's got my interest at heart vis-a-vis my expectations for selling me that thing. By the same token, when I go to see a dietitian, I know she's going to look at all of my
back to On the Money here on WDBO AM 580, always streaming live inside your WDBO app. At this time of the show, I like to give out the off-air number because a question may pop into your head, and there's probably not enough time to get it in the next 4 minutes. So write down this number. Charles Curry standing by in the Certified Financial Group office. That number is 407-869-9800. 407-869-9800. Some great workshops here coming up in the coming weeks, as there always a great flow of information coming out of that building, coming into that building as well, the Office of Certified Financial Group. We got a text. We got Joe Bert and Harry Stadelmayer standing by answering our questions, and one just rolled in through that break. It's a nice broad question, so we can kind of take it where we see fit. And Rob wants to know, what are some important year-end investment strategies?
I can't believe it's fourth quarter, Joe. I think we were doing beginning of the year planning like 2 weeks ago.
I can't believe it's almost 2025.
Yeah.
I still remember 2000 when the elevators are going to crash and planes are going to fall out of the sky.
Yeah, exactly. But here we are in the fourth quarter, and one of the things that we're actively doing here, all the planners, is looking at portfolios as we get into the fourth quarter, and our third quarter statements are going out. And basically, I just wanted to touch on a couple things that if you hire us to do wealth management for you, some of the things that we're looking for as we get into 2025. And the first one Joe mentioned earlier is rebalancing. If you've had a 60-40 portfolio, meaning 60% in equities and 40% in fixed income, and your fixed income is lagged, and your equity portion, your mutual funds, ETFs, or maybe even individual stocks have been in equities, there's a really good chance that your portfolio is a little out of balance. If you wanted to have a 60-40 portfolio, which means, again, 60 in equities and 40 in bonds, there's a good chance you may be 70-30 or even 80-20, which means that your portfolio has taken on substantially more risk than what you may think. And so at this time of year, our clients have what they call investment policy statements, and that says, hey, this is the level of risk that I feel I can live with and I'm comfortable with, and I can put my head on the pillow, and I know you guys have handled it, and I'm not taking too much risk. So this is the time of the year we look at rebalancing and getting some of those, as Joe said earlier, selling some of the equity where it's feasible. Like, we don't want to create a huge capital gain, but looking at rebalancing the portfolio. Or I've actually had clients say, I kind of like what happened this year. Mm-hmm. Keep me.
Yeah.
Right where I am.
Right.
I don't want to be balanced. Yeah. I'd like to be moderately aggressive right now. Well, there's some risk involved in that too, but I've had some clients say, don't you dare touch my equities.
Yeah. That's a challenge. When it's feeling good, you don't want to get out.
Exactly.
Yeah, and that's the discipline that it takes to keep you online, because when it corrects, you're going to be looking back
saying, why?
Harry, I should have listened to you.
Yeah. The other one is tax loss harvesting. Yep. This is a biggie in non-qualified accounts, and that's basically selling losses and offsetting some gains. So in essence, if you have an investment and it lost $15,000, you go in, you look at something that may have gained $15,000, and you sell, and you ultimately end up getting some profits for no tax. Look at the quality of your portfolio. Also, check your tech positions. If you have everything in 7 of the biggies, careful. We think that the tech market may be a little bit overpriced. Overheated. And then also the last one is be careful about buying mutual funds in non-qualified accounts in the fourth quarter, because as we know, mutual funds will generate long-term capital gains. Yep. And you may be in a fund that you buy this week for $50,000. It may go down to $45,000 or $42,000. It may go down, and ultimately you're getting a long-term capital gains, and you're paying tax on money, and your portfolio went down. So be very, very careful as you're buying in non-qualified. All
right, Josh, hear the bumper music. It's good to be with you. Once again, go to our website, financialgroup.com, sign up for the workshops, and we will see you all hopefully next week.
Thank you so much. You've just listened to another great episode of On the Money, where we're planning tomorrow
today
with the Certified Financial Group.